Hello, my name is Dr. Cheryl Dunn, and this video will demonstrate how to create a multiple-step income statement. So take a look at the accounts given in the problem. The first thing you should recognize is that you will not use all the accounts because not all of them are revenue and expense accounts, and the only accounts that go on an income statement of any kind are revenues and expenses. Okay, you start by writing the heading at the top of the page. So you start by writing the company name, which in this case is VerlanJenksMultipleStepIncomeStatement, and then you write the name of the statement, which is income statement. Now notice that you don't specify in the heading the fact that it is a multi-step income statement. The user will be able to tell by looking at the body of the statement whether it's multiple step or single step. In your textbook you might see in parentheses multiple step in parentheses after that. That's to let you, the student, know that it's that kind of format. But when you prepare one, you don't want to put multiple step or single step. Just make the financial statement according to which method you're using, and the user will know. And then the third thing you write is the time period covered by this income statement, which in this case is the month of August. And so we say for the month ended August 31. So that's the heading of the statement. Next, you think about the format of the statement. And on a multiple-step income statement, the first important subtotal is called gross profit. And so then you think about what makes up gross profit. And the answer is gross profit is sales minus cost of goods sold. So our sales number here is $412,000. Write it kind of over this way. 927. And then our cost of goods sold is $201,102. And we're going to put that in parentheses to show the fact that we are subtracting that number from that number. So then when we do the subtraction, we end up with a gross profit of $211,825. And you can see $211,000 compared to $412,000, it's a little bit more than 50%, which is pretty good. Okay, the second important subtotal on a multiple-step income statement is the income from operations, or sometimes you call it operating income. And you calculate that by taking the gross profit that you just calculated and then subtracting the operating expenses. So what we're going to subtract out next are the operating expenses. And so we'll put in the operating expenses and then we'll list them under here. In this company, the operating expenses, first I should note that operating expenses are sometimes separated into selling expenses and general and administrative expenses. The selling expenses are all those that are directly related to selling the products. So things like advertising, the salesperson's commissions, anything having to do with the actual store, display room, or showroom. If you were depreciating that facility, that would be a selling expense. In this problem, we're not given enough information to be able to tell between selling expenses and general administrative expenses, so we're just going to lump them all together into operating expenses. Okay, so the operating expenses that are in the list that we're giving are depreciation expense and salaries and supplies and utilities. So we'll write in the individual amounts here. The depreciation was $10,415. The salaries were $90,595. Supplies are $3,200. And utilities of $11,804. we add up the operating expenses then, they total $116,014. We then can subtract the operating expenses from the gross profit, and that yields $95,811, and that is our operating income or income from operations. Okay, next we add and subtract any of our other revenues and expenses, and typically we're looking at interest or other kinds of revenues and expenses that are not part of our normal line of business. If our line of business was selling some type of a service, but we also happened to own a building that we rented out, and that was just kind of a sideline, our rent revenue might appear in the other revenues and expenses, things like that. In this case, all we have is interest. We have interest revenue and interest expense. And I should have mentioned the subtotal that we're trying to calculate next is income before taxes. And so we're going to take anything else besides income tax expense that we haven't already incorporated that is a revenue or expense. It's going to fit into this other revenue and expense category. And it will help us calculate that subtotal called income before taxes. And so in this case we have interest revenue. And that amount is $2,020. And we also have interest expense, which is $5,530. We then net those together, and we find that since the expense is subtracted, we have a net overall expense from these other items. And so we're going to be subtracting the $3,510. And that will give us our income before tax. And that's going to be $92,301. We then subtract out our tax. Which in this case is $36,920. You can see we have a fairly high tax rate in this organization's community. And that leads us to our bottom line number that we are most interested in, which is net income, which in this case is going to be $55,381. Alright, so this is a multiple step income statement. Thank you for viewing this demonstration. I hope you found it helpful.